What's up, everybody? It's your boy Deonte Burden, aka Mr. Short Dollar himself. Tonight we'll have a quick live feed with you guys in regards to something I want to go over in regards to the house market. I'm just telling you guys, don't buy a new home right now, especially in first-time home buyer. Do not buy a new home right now. The market correction is right around the corner, and I want to just share some personal information that I've experienced. I just did a recent cash out refinance on my home, and I'm also gonna make a video in regards to that process, and just dealing with the mortgage rates, and also looking forward in regards to home values in the near future. But I want to have a conversation with you guys tonight in regards to actually not purchasing a home right now, because I do believe the market correction is right around the corner, and I will go over and explain to you guys exactly why, with the market correction, what I think it will be and how it will impact you on any new home purchase or new home sales. Right now, we're streaming live on Facebook, YouTube, Instagram, TikTok, LinkedIn, and Twitter. This is make sure I'm on all my platforms. Y'all bear with me 1 second. I was having a little technical difficulties at first, but I'm on all my platforms right now. But again, tonight we want to discuss, don't buy a new home because the market correction is around the corner. So I know all you guys are seeing everything that's going on with the Fed rate going up. I did a video on that last week with Mr. Short Dollar in regards to the Fed rate going up, and it's going to probably be taking more and more in regards to inflation. We know inflation is pretty much a price increase in the economy. Everything has been, we've had hyper increases in prices, that being from food, housing, gas pricing, all kind of stuff. When we house, we talking about home purchase and renting. So, typically what happens is, you have what theoretically what's called a recession. A recession is an economic slowdown over two periods, that being 2 quarters. And so we look at, they measure the GDP or the gross domestic product, and that's your company's national output. If you have two slowdowns in consecutive, you have slowdowns in consecutive quarters, that's theoretically what's called a recession. We've had a slowdown in the past, the first 2 quarters of the year, but they're not technically looking at it being a recession, because there have been kind of minimal decreases in regards to that. But with that said, by them doing the actual increase, the Fed comes through to correct everything. That's why they increase the actual Fed rate or the interest rate. The thought process behind the Fed doing that is that you see rising mortgage prices, you see rising rent prices, gas prices. With the Fed rate increases, that goes back to the actual financial institution, and they will increase their cost to borrow. That means the interest rate that they will charge the end consumer, i.e., me or you, that increases. So if the interest rate is increasing because the Fed gave the lenders a higher rate, and then they tack their percentage increase on it, if that increases, that will make us reluctant as the end consumer to want to buy things, because now we're buying things at a higher rate. I.e., so once we start buying things at a higher rate, we'll maybe more hesitant, because you have supply and demand, because less people will want to make purchases at this higher rate. Prices will decrease and everything will correct themselves from now. So I hope I gave an easy explanation in regards to why the Fed comes through and increases rates. Because again, you look at the issue of the inflation of these hyper price products and that are out there. The rate goes up because again it makes people more hesitant to buy. And again, that no one wants to buy a car at $50,000. Normally would have been priced at 30, but you have this supply and demand. No one's going to buy it. That $50,000 car price is going to drop down to probably $30,000. And that's probably stretching it with that example, but theoretically that's how that goes. With that said, guys, I know everybody's seeing, you may see different opportunities out there with housing, and I can see you can be in a funky spot where sometimes the logic may be, because especially with the cost of rent. And guys, y'all bear with me because I got these cameras in front of me, as far as TikTok, LinkedIn, and all the different other social media platforms. I can understand theoretically where you may look at it that, hey, rent is high, but the amount of money I'm paying in rent, I might can go purchase me a home with doing that. But even though the home prices may be, sky high, you may feel like you're burning money with rent with doing that. I get that part, but understand what's happening, guys. if you turn around, even though you're looking at, hey, I'm renting out an apartment for $1,800, I might can get a similar home, maybe a let's say 250, $275,000 home at a 30-year fix for around about anywhere from 17 to $1,800. You're like, well, if I'm paying this kind of money, renting this, two bedroom apartment, maybe I can go and buy me a house. That's a good way to look at it. The issue comes up is when you look at the relative house that you're buying for that dollar amount, is that the true value of that home? What I mean by true value of the home is just because the price of a home value has spiked up, and that's been going around nationwide, but the home value spiking up. Now, with the Fed increase, the Federal Reserve increasing the Fed rate, the amount of sales are starting to slow down. And like I said before, when the sales start to slow down, once we start getting more and more inventory, then it hasn't really slowed down as far as the price dropping. But once the sales stop and you have an inventory, then the actual price is going to drop, right? And then when the prices drop, i.e., the value of the homes are going to drop. So what you bought it for at that particular time and the value for it later on can be two different things. The problem we don't want to have a loan where we upside down with this particular home. And I think that can happen a lot now. And that's why I want to have this discussion with you guys tonight, especially for over the next 6 months. I talked about that last week on the show in regards to actually making any kind of home purchases for the rest of the year. I wouldn't advise anybody to do it. And if you're a savvy investor, you're doing fixer flips and things like that, you would hope that you're experienced enough to know what you're doing, to where you're actually buying certain things and being able to do that and investing. But again, this video and the discussion is not for investors. We're talking about new first-time home buyers, even people that actually maybe your second home were doing. You just like I say, you're looking at maybe you have you actually getting a good offer for your current home, and you say, well, listen, I can, the amount of money they offer me right now, I might need to jump on it. But at the end of the day, when you jump on it, are you going to be able to get, the same bang for your buck with a new purchase? Maybe not. I would just err on the side of caution with doing that. Maybe have a game plan with doing it. That's one thing. But any new home purchase, I would just be reluctant. So let's, go back into depth, why I'm saying this. Let's say you turn around and you want to buy a home for $200,000, right? $200,000, and we're just gonna throw out arbitrary numbers, guys. I don't have anything calculated in front of me. $200,000 house, 30-year fixed mortgage rate. It may be with the Fed rate right now, let's say 6%, right? Well, I mean, with the Fed rate increase, you got a mortgage at 6% mortgage, $200,000 loan. You may be at, let's say, $1,500 a month, right? The issue comes up. We've got that loan in place, 30-year fix. We go to the rest of the year. You got your house is valued at $200,000. You got the mortgage for $200,000. You're feeling pretty good. You're paying $1,500 a month. Great. The actual rate keeps increasing, and let's say it gets up to 7%. So somebody they can get that same house at 7% later on. They may actually encounter a monthly payment of $1,800 or $2,000 a month. So you did pretty good. You got that the house at a lower rate, at the same price, and a cheaper mortgage payment, right? Same, and that's because the rate is increasing. If the rate is increasing, you get the same term being the amount of years. On the same term, you might get a lower payment. So they may get it for $1,800 a month, right? And that may be something that they purchase in, let's say, September, October. What's the problem that both of you guys are encountering? Is what the rate has got up to 7-8% from the 6% you got, right? And now, because the rate is so high, people don't want to buy any more houses. Now we got this inventory, and what happens? Prices start going down. Right? So the house that you bought, the same house that you bought across the street, just sold for what? $198,000, $195,000, $185,000. I have no idea. And I think anybody can that actually gives you their opinion. That's all they're going to be doing to give you their opinion. how much the prices are going to drop. I don't think it's going to be anything similar to 2008, 2009, but other people may feel different ways. Some people feel like it may not be hard to drop at all, but I do believe it's going to be a drop. But I would say to say if you got something for 200,000, the value is, I think it's safe to say, 190,000. Probably lose $10,000 the least in equity with doing that. Probably be more than that because again, the rate is going to go up, the price is going to go. So you understand that when you're getting these particular items, these rates have went up, these prices have dropped, and now you're not upside down, totally upside down with it, but you do have a product that's overpriced right now because you didn't get the home at the true value that it is. We know right now with inflation, all the prices were inflated and all of them went up. That's great on the balance sheet because your value went up and then also went to your personal equity to increase your net worth. When you start making a purchase of something at a certain price and you're locked in at a 30-year mortgage, and then, a couple months later, you turn around, that same product you bought at $200,000, maybe $190,000, $185,000, $180,000. That's not a really good move because now we got to sit here and hope that time can have us come back and increase our value to do that. But we're locked in a 30-year agreement on this particular mortgage. I just say, if you can, hold on at least till the end of the year. And again, I don't know. Everybody's situation is different. You may like the houses you've seen or the houses that are available to you out there, guys. But I would just say, on the side of caution, please, I would just say, hey, just do your due diligence with doing it. I am not a mortgage person or anything like that, but I have been investing for over 15 years. But I will say that it's kind of common sense. You don't necessarily want to buy something that the value is going to decrease. Now, even if you get something right now at 200,000 and the value goes up to 205, 210, you're like, wow, I feel pretty good. I just bought it. I just gained $5,000-$10,000 equity in a couple months. That's good. But remember what I said before. The whole purpose of the Fed increasing rates is to slow down the economy, right? It's to stop people from borrowing money, stop people from doing transactions, it's to stop people from doing business, right? So the prices can go down. So the cost of living and everything, the cost to do everything will kind of level up and correct itself, all right? So we can avoid the high mortgages that are out there. We can avoid the high gas price. We can avoid the high food costs. We can avoid the high rents. That's the whole point of increasing the Fed rate. It's just to correct the market. So again, do you want to get yourself in a situation where you do that? Excuse me, you stuck with that mortgage with doing it. I don't have a crystal ball to tell you when it's going to happen, but we know it's going to happen because that's the simple fact. That's why the rates are going up. Coincidentally, even with the recent Fed rate increases, the actual values on some of these loans, the actual values on some of these properties are still going up, even with slower, slower sales. With sales decreasing, the values are still going up. So it has not, the actual corrections by increasing the rate has not taken into effect yet. But we all know when we look at basic economics, everything rolls in cycles. So it has that ripple effect. So what you do right now in August, you may not see the result of it, depending on how big a impact it is. You may not see the impact of an August transaction or something that's implemented in August till December or January or March, right? Maybe sooner, but usually that's how that goes. Things that are taken now, you don't see them till later on. That's how economics go. But I would just kind of err on the side with doing that, guys. Like I said, this is not a conversation for anybody looking to get in real estate investing and anything like that. But we're talking about basically you want to do any kind of new home purchases. You're like, hey, especially if you're in that thought process of weighing it out between renting and buying. I think it's all going to go down soon. How much is going to go down? I couldn't tell you that, but I would err on the side of getting any kind of 30-year commitment with something that's going to probably be devalued soon afterwards. I wouldn't think that was one of the wisest thing at all. You may have an idea where you say, hey, look, D, I'm doing this because of this, that, and that. Yeah, you don't understand. I'm not saying my way is right, but I can have a discussion with you in regards to why you might say something that is different, or if you feel that way. Now, like I said, we're streaming live. I am Deonte Burden, aka Mr. Short Out himself. Tonight, we're talking about don't buy a new home. The house market corrections right around the corner. Make sure I got anybody got any comments or anything like that. Just trying to keep this going. Stream live on Facebook, YouTube, Instagram, TikTok, LinkedIn, Twitter right now. Have anybody got any questions while we're talking about this and stuff? I would, if you guys, got any questions, let me see. What I got? Amy 14, hugs and kisses. Can I get a shout out? Absolutely. I appreciate you tuning in. Thanks for tuning in. Now, you absolutely can get a shout out. Has anybody got any question in regards to what we're talking about tonight? Again, we're talking about, not don't make new home purchases right now. The market correction is right around the corner. Feel free to reach out to me right now because I wanted to go over this information. We got a lot of information we're going to drop in the month of August with you guys. We had a great month of July, awesome month of July. But I definitely have a lot of information I'm going to be going over you guys, especially what's going on in the economy right now. So, I'm super excited about that. And like I say, guys, we look at some of the, I think the medium home sales for the U.S. was like $400,000, and these values are still increasing. So again, I can understand. I understand, in regards to why a person would look to actually get, a home right now because the values are increasing. But again, the thought process is, guys, remember, do I want to get locked into that 30-year commitment on something like that? So I want you guys to just think about that. Shout out what we got right here. Amy Foreman. What's going on, Amy? How you doing? I appreciate it. I appreciate it, Amy. Also, I'm from Atlanta. I appreciate you. I appreciate you tuning in. Let me see if we got anybody else got any other questions with that. I want you guys to make sure even if you're looking to do that, you have a good discussion in regards to everything, in regards to if you're a broker or mortgage person, in regards to the values. Do your due diligence, do your homework in regards to how the price is and how the values of the homes are going on. So we got right here, a question is, please forgive me if I pronounce the name wrong, U2 Sonos, and I probably booked it up, is a good time to sell your home. I don't think it's a bad time to sell your home. I mean, because if you have a lot of equity in your home and you got an opportunity to make some money if you sell, theoretically, that's a good time to do it. The thing that you still got to take into consideration, once I make that sale, what's going to be my next move, right? And if you ever have a game plan, say, hey, I'm going to sell this and I already have somewhere else to move into, great. I'm going to sell this and I'm going to maybe, put myself in this position or rent something like that for a couple months to do this. And you got some kind of blueprint. I get it. The thing of it is that usually when you actually say you sell, you can turn around and make a purchase. Just, you bought a house for, $50,000, you sold it for $100,000, you made $50,000, and now you want to turn around and upgrade to a bigger home. The issue comes up, the house that you just sold for $100,000 now may be valued at $150,000, $200,000, and the money you look to actually put down towards that, you may be just getting something similar to or a little bit bigger than what you had before. So the thing you have just taken consideration, we talk about selling a home, what will be a game plan with that? You can't necessarily look at the actual equity that you have or the profit you're going to make from the sale. Really, the thought process is what you're going to be doing afterwards. So if you do have a solid plan with that, like i.e., you have another house to move into, you're going to stay with somebody for a certain amount of time, I think it's a great move to make. But it still goes back to if you have any kind of game plan in place. Instead, I got locked in the low interest rate, but the interest rate is high now. And that's what we're talking about. The thing of it is just right now, you're talking about rates probably should be on average, I think nationwide, probably at 6% right now. And they're going to keep going up. You got to ask yourself, and I know there are different situations with everything with doing it. But if you're selling, even at the rate, that really won't affect you too tough. That more on the buyer side. But if you want to make a purchase, It just depends on what you're trying to do. But I will say, you're in the three, and what you try if you're in the three, and you're looking to do a purchase, or you're looking to do a sale. Because right now, I think you won't be able to get into a three for a while in the near future. But even if you're looking at doing any new purchases, I would just hold up on it. I would definitely hold up on any new home purchases at least through the end of the year. At least through the end of the year if you can. That's the thing about it. Gotcha. But even that, you say you're locked in at a 3%. You definitely won't be able to get a 3% anytime soon. But I definitely would say wait till the end of the year if possible, because rates are going to keep increasing. Rates are going to keep increasing. Now, if you turn around and say, hey, listen, this is what I want. I can't live without it. This is a great opportunity. I get it. But you got to do the math in regards to just saying, if I get this particular property, now, if you said it's going to be my primary where I'm going to live at, now maybe refinance in the future. If you want to take that gamble to do that, there'll be something for you to decide. But if you turn around, you want to get something, you say, I want to sell it in the future, you still also got to look at, am I going to buy something that what we're talking about tonight that is going to be devalued within the next year? Because anything, keep in mind, guys, what I'm saying, even the rates are going up. The home purchase that you make today, with the rates going up, the price is going to go down. The house at $200,000 would probably be $190,000 at the beginning of the year, or maybe $180,000, right? So we always got to keep that stuff in mind. That's the whole point of the Feds increasing the rates, to slow down the economy, to create the supply. It's all basic supply and demand. If it costs too much for you to buy that home because the rate increases, now we got this inventory sitting out there. Now, because we got all this inventory out there and all these demands, people aren't buying it. So now what happens? The price got to drop so people can be interested in buying again. And that's what happened. But if you bought your house up here at $200,000, right, and everybody stopped buying and everybody want to get back active at $180,000, you've bought an overpriced product. And we got to be thinking about that, guys. It's just something you just got to keep in mind. So I just want you to be conscious of it. And the rates are going to keep increasing. Like I said, the rates have been increasing, but the home values have not started going down yet. So they're going to keep increasing them until they see some kind of change in actually the economy with doing that. So everything can level off and correct themselves, because we can't keep doing this hyperinflation. Prices are going up. And I'm telling you, that's the way they have to combat, with having a recession. They increase the rates, in relation to that. So I just want you guys to kind of keep that in mind, because I just did, like I said, I did a cash out refinance last week. And, I'll do a video in the next couple of days, probably next week. So kind of go over that process with you, my thought process and what I did and why I did what I did. And it went smooth, good deal and everything. Hell, I wish I could have did it this time last year, but I couldn't do it. But it was a pretty good deal with that. But I do want to go over that to kind of show you guys some different angles to look at certain things we have here. So how do you get your equity up? Well, at the end of the day, you can't really. The only thing that you possibly could do to get your equity up is more so you can pay your loan down. That usually you have other things that can actually impact your equity going up, being i.e. the area where you live, school system, things like that. But at the end of the day, most of that comes the equity going up, but just the value of the home going up from exterior things happening around you, and also you paying your note down. But again, we're talking about with the market going up, if the value is going down, hey, you can be counterproductive by paying more money to your mortgage. But if the value is going down in the particular area, it doesn't matter. The value is going down. I mean, your loan is decreasing, but the value is going down. So you got two things. You got something working against you with doing it. You got a lower note, but you also got a lower valued house. So that's why I just want you guys to kind of keep that stuff in mind in regards to this, guys. Just if you can, just ride the wave. But most importantly, I want you guys to become very, very knowledgeable in the interest rate, and the economy, and real estate. You got a lot of videos out here on the internet. Keep in mind, I'm an accountant. I've been in business over 21 years. A lot of people are telling, buy a house here, fix a flip. Investors look at things from a totally different perspective in regards to uh, their stuff is more transactional in regards to buy this, flip this, do this, do that, because none of their stuff has a long term perspective. When we're looking at, we're talking about fixing, flip, and flex investors, not necessarily buying whole. Person from a buy and hold perspective, where actually they're a landlord doing that kind of stuff, a lot of that stuff is going to be based in math. If they can buy something at one price, looking at market rent, things, that kind of stuff, they're looking at the actual payment in relation to the market rent and also the equity as well. So they're looking at these kind of things also. But a person that's actually doing fix or flip, their stuff is a little bit more transactional. So they don't, they're not living in this kind of long term perspective in regards to what we're talking about, especially looking at these getting 30-year mortgages, for a home. They're not necessarily looking at it from that perspective. But if you're looking at purchasing a new home or even the idea even selling it, I just want you guys, like I said, if you're thinking about selling the home, have that plan about what you're going to be doing in the next phase. Like, okay, if I sell this because I got all this equity in my house, the value has went through the roof, what's going to be your game plan? I'm not telling you not to do it, but I am saying you need to make sure you got a game plan in regards to that, because there are people that have sold their houses because they got good deals, but they living in damn efficiency lodges right now because they can't find anything. The house they just sold is pretty much costing the same thing what they just for the same price that they sold that old house for. So the forever home or the dream home has went from 200,000, it's $500,000, and you're sitting there like, I can't even buy anything. The money that I made, hell, I'm just gonna buy it like I'm move back into my other house. So I just want you guys to be thinking about that in regards to that. I don't see anybody got any questions. Give me 1 second, just going through everything. Appreciate you guys tuning in. Again, I am Deonte Burden, aka Mr. Short Dollar himself. Tonight we got a live feed. We're talking about don't buy a new home. The housing correction is right around the corner. Guys, real quick, I got the how to start your own tax business course going. If you guys are interested, go to my YouTube channel, Mr. Short Dollar, and look in the description section for how to start your own tax business. I've been in business over 20 years. And I have a course, not to teach you how to fill out forms or anything like that, but just give you guys my system in regards to how to run a tax business, marketing, advertising, how to hire people, things like that. But we launched that course last year. So if y'all interested in getting into tax business, it's a real good business to get into. Like some 21 years in the game with doing it. But check out the course, How to Start a Tax Business. We're going to do a couple promo videos in the near future. But I just want to put that out there in regards to that. Let me see what we got here. I want to buy a luxury RV and travel. That's my game plan. Awesome. I think, you know what? I was looking at a couple of RV videos on YouTube last week with doing it. I do have a game plan. I want to be fully retired within the next 6 years. I got 4 sons. My youngest son starts middle school tomorrow, and he graduates in 6 years. So my game plan is, since the other 3 will be grown, and when he gets out, it'll be me and him this time next year. My goal is to be fully retired in 6 years. Maybe still do some taxes, maybe still do speaking, videos, things like that, but not really technically working. And I was kind of thinking about that just with the RV and stuff like that, but I never thought about it. I was just looking at it. I guess I was just ignorant to how smooth they look on the inside and everything. We got videos coming out too, guys. Want to let you know in regards to, I'm going to break down just, because I know a lot of people hear the term recession and inflation. I got videos coming out within the next week where I'm going to break down exactly what a recession is, what the things, look for, the definition. I know I went through a quick example of recession at the beginning of this feed, but also what inflation is. Got a lot of information, especially you guys in business. I know it's a lot of people that check out the channel. They in retail and stuff like that. Different financial ratios you need to be looking at, because a lot of people get in business, and I tell you a lot of times they in business just to say they in business, and they busy, but they don't necessarily know how to monitor, inventory, profits and losses and things like that. So we have videos in regards to just explaining that, because coming from my side of being an accountant, we have a lot of information to share with you guys with that. Do you have any new grants? We got a couple grants we're going to let you guys know. We had now, this is what I want everybody to always keep in mind with the grants. There are over 150 grant opportunities on Mr. Short Dollar on YouTube. So a lot of the grants, even if I want you guys, when you go to the YouTube channel, Mr. Short Dollar, go to the grants playlist. Some of the grants are reoccurring grants. What I mean by that is some of the grants that were posted last year, even the year before, they reoccur every month. They reoccur every quarter. So go through the grants playlist and look through all the grant opportunities, because even though we might have made a video last year, that grant still may be active, right? So I just want you guys to understand that there are tons of grants. Just go to the YouTube channel, look on the grants playlist, and just you gotta spend a little time, go through it. None of the grants are ours. What we do is we just, just like we do, I'm having a discussion now. I'm not getting a kickback or anything like that. I just vet to make sure everything's legitimate. And I typically try to make sure I'm dealing with established companies that may be Amazon, Coca-Cola, Pepsi, things like that, and just share the information on the grant for you guys to take advantage of being small business owners. And they can be for minorities, for veterans, for women, farmers, different things like that. But I double check to make sure they're legitimate grant opportunities. But that's why I make sure the ones they have, they are simple grants. When I say simple grants, you don't necessarily need a grant writer or somebody to fill out, a 30-page application. They use something where they just vet to see if you're a legitimate business. They may want your tax ID number, maybe want to see a copy of your license, business license or something like that. Fill out the questionnaires and stuff, and you'll be able to have an opportunity to get it. But I want you guys to understand something. I'm going to be very, very straight up with you. Because it's free money, we start talking about these grants. Guys, grants are going to be very hard to get because there's a lot of you out there, right? There's no, everybody wants to get free money. So if you got a grant opportunity for $100,000 and they're giving out 10 grants of $10,000, you're going to have all kind of people apply for it. So that's not discourage you from not doing it, but hell, you're not losing nothing. If it takes you 10, 20 minutes to get an opportunity to get $10,000, and then you feel like that's a waste of your time, that's on you, right? I'm just saying. Have I been awarded some of the grants that we got? Absolutely. Have I been awarded the vast majority of the grants we got? No, absolutely not. But at the end of the day, what are you losing? You done lost a couple of time, but at the end of the day, at that same time, you still be trying to figure out where you're going to get some money at, so you ain't losing nothing. One thing I do want to say, because I had somebody reach out to me earlier in regards to they hadn't heard anything about the grants. Guys, you guys have to, you're welcome. You're welcome with that. But I want you guys to understand something. You got to read the fine print with these grants. Look at the actual qualifications that they have. Look at the actual award date, notification, all that kind of information. A lot of times the question that, even dealing with grants, investors, banks and everything, they ask you kind of, scamming questions. What I mean by that is they ask you questions that they can actually knock you off about. So when you skip certain questions or don't answer them correctly, or you don't have a certain information, that takes you out the pool. So actually, when they have a pool of 100 people and less answers are getting, input in or answered in regards to what they're looking for, that's how they can narrow the pool down with doing it. Guys, you got to make sure when you start talking about having grants or getting grants or getting kind of business funding, i.e. loans and stuff, because like I tell you guys always, the first place I always tell you guys to start is your local city or county government, and that being like wherever you got your business license at, your local business license office, your economic development office, because the federal government gave a lot of states and counties and cities grant money to reach out to people. Now, they don't market that. They may call their friends. They may shoot out an email to people that are already licensed in that particular city or county with that. I get them all the time where I got businesses in different places. I get from the economic development, hey, we got this particular grant. Some of them I can look at it, now we don't qualify for that. Some I do. So you need to just, guys, I would always go with my whole inside out theory, look at your local municipalities, city, county, state, and see what opportunities, that they have for you guys. But with that said, you got to make sure you're legit. Nobody's going to cut a check to Deonte Burden. They're going to have to cut a check to MrShortDollar.com, MajesticBusiness.com. They got to cut a check to that. And they want to make sure it's a legitimate business. We hear this whole thing. I did videos in regards to what we started talking about, startups and things like that. Guys, remember what I told you? A startup is not something in your head. Like, hey, I got this idea of a business. Like, can you give me some money so I can start my clothing line? So I can start, making these candles. Now you need to have the damn business already and already have some kind of traction with doing it to show you give people a reason to give you money. Remember, theoretically, for somebody to give you money, for a person to just turn around, complete stranger, to give you money, they got to feel that you're going to do right and bring them their money back. We talking about lenders and investors, right? You can't keep going to people all the time as a business owner with your palms up. It got to be one palm up, one palm down. If you give me $1, I'm gonna bring you back $1.05. I mean, that's your business, but it's mentality with both of your hands up. I just need some help to start. Nobody don't give a damn about that. Nobody don't give a damn about that, because at the end of the day, theoretically, if you were really, really sure that you can make your business happen, you don't give a damn who's gonna give you money now, or if anybody gonna give you money now, because you're gonna make it happen. And if you feel that strongly about yourself, if you get money to help you, get assistance, great. If you don't get assistance, great, because you feel so good about it, you're going to make it happen no matter what. But if you have any kind of inclination to slow you down and you don't start your business up because you didn't get what you want to get, man, people going to be the hell with you. So you got to sit there and understand how business works. Business ain't both palms up. One up, one down. $1, I'm going to give you back 105. You got to think like that. You got to think like that. Seriously, guys. I really want folks to understand that concept. People ain't going to deal with you. You start talking about complete strangers. We can sit here and say that, hey, out of the kindness of my heart, I'm going to do this. I will help people out and all that kind of stuff. You ain't going to stay. If people are not in business, they have not been in business in a while, to have that mentality to just give away their money like that. Now you start looking at a Bill Gates and Warren Buffett and all these guys, they get out of all that, they're being philanthropists and all that kind of stuff. Yeah, you can do that. You got billions of dollars. You can do that. They got billions of dollars, and actually money is accumulating for them 24/7 with different investments they got. But when they was out there building and getting everything together, I'm pretty sure that they were helping people. They were making investments, but they were very, 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 very selective with what they were doing, guys. And that's how people are going to be. But the thing of it is, you just have to make sure that you got the right mentality with doing it. People will assist you, but you got to make sure that you're projecting the image that you have tried to assist yourself first. You can't want them. I can't want you to make money more than you want to make money, right? You got to sit there and already. Again, the thought process is, if you get it from me, good. If you don't, it's still good. You're going to make it happen. And when you believe in yourself that much, it gives the energy out to people. I don't mind helping him because he's straight. I see how they doing it. She moving that particular way. Cool. I don't mind investing with her because she got traction going out. But if your whole hang up is, I can't do nothing, I'm waiting for people to help me, you ain't going to last too long. And people not going to be inclined to help you out. Okay. Let me see if we got anything. Anybody got any other questions? Please make sure you go to that, check out that grants playlist. I'm going to have some more information in regards to different lending products out there as well. One of the biggest things I want you guys to understand, you got a lot of, on social media right now, you got a ton of videos out there that telling you guys how to go get a business loan, how to get these business credits and all this kind of stuff. Get your tax ID number, get your DUNS number, trade lines. And see, the thing of it is, and that's right, this is the problem with all that, and I keep talking about this. The loan and the credit you're going to get is going to be so effed up, you're going to wish you never got it. You can get you a $10,000, a $5,000, $100,000 loan. You can get it, but the rate going to be so effed up. You are never going to want to borrow money, and you'll never make more than 2 payments with it. I'm telling you, guys. I'm telling you. What people never tell you is they tell you we can do this and give you this money and all that kind of stuff, but they ain't going to never tell you what you got to pay them back. They ain't going to never tell you what you got to pay them back. So at the end of the day, that's what happens. So much people get money, and they don't understand it. They don't stuck around, put the hand in the ant bed, and when they pull the hand out and they see all the ants on them, you can't do nothing. You just stuck. You just got to deal with it. And that's what happened. Just because you got access to something doesn't mean it's something that's good for you. So I just want you guys to be very, very mindful of that. Make sure when we talk about, guys, we look at those loans. You can look at the dollar amount you get for the loan. You can look at the requirements to get the loan. But make sure you're looking at the term, be an actual years, or however you got to make your payments. And that rate, you got to look at that interest rate. You got to look at that interest rate. Just because somebody gave you some money, you got to look at the cost that they charge you, that rate. And if you know that, hey, you got credit challenges and everything, and it's been difficult for you to get funding, that is not going to disappear. It's not. Okay. Check out the video I got on Mr. Showdown on YouTube. Do I need a personal guarantee for a loan? That's especially when you start looking at business loans. Most time they're going to require a personal guarantee for an individual, which usually that individual usually has to have a credit score of over 700. If that's not the case, the loan probably you can get quote unquote business loan without a personal guarantee, but it's not necessarily going to be a good deal for you because they're going to want collateral. They're going to charge you a high rate. They may give you on a minimal amount. I'm telling you, and that's just how it is. I've got several business loans over here. I got SBA loans. I'm talking about SBA loans, not COVID disaster loans. I'm talking about the 50-page application loans. Trust me, this is not over $150,000. At $150,000, but several over $100,000. So it's not. I'm telling you guys, it's not easy to get it when your stuff is together. And when you start talking about if things are kind of like a little, challenging for you, you're not going to be able to get it. It's going to be difficult to get certain things. So I say that not to make you stop and not try to get funding for your business, but understand you might need to fix some things and kind of adjust your path to getting there. A lot of times we feel like, we can't wait. This is the time I need to do it. And when you rush, you're going to make rush moves. And that's what happens so many times when people make rush moves. You'll do something without thinking, without planning, without preparing. And, 6, 7, 8 months, a year later, you're back at square one. I asked the question all the time, how many people got something to show for those disaster loans that they got a couple years ago? How many people? And that's not to pick at nobody, but at the end of the day, people got the money. They want to start businesses up and everything like that. Some people still run around, but the vast majority don't even have that damn money. They got that money. They got a PPP money. The businesses and stuff like that didn't work. And, it just that you move incorrectly with doing it. It's a certain way you got to do, when you're a business person, guys, I'm going to be honest with you. We start talking about entrepreneurship. I know we're getting all off of everything. We started off talking about the housing market. But guys, I want you to understand something. The key thing every entrepreneur got to do is just be successful in longevity. Two things. You got to be disciplined. You got to be disciplined. You got to be disciplined and you got to be consistent. If you're not disciplined, you're not consistent, you ain't going to last too long as an entrepreneur. People think a lot of time I need the money. You'll get money in and out of money all the time, and that money going to disappear so quick because you're not disciplined and you're not consistent. Those are the two things that every entrepreneur got to have for you to be consistent. For you to be successful. You got to do that. Because if you're not disciplined, because you're not going to have nobody standing over your shoulder. You're not going to have nobody making sure you do certain things are in place. And when you get money in your hand, and if you're not disciplined to do the right thing without having to do the right thing, again, doing the right thing, paying all these bills up, make sure all this stuff taken care of without somebody making you do it. Because it's one thing you at work, supervisor check, hey, did you finish payroll? Did you send all those emails out, this, that, and that? Cool. But, somebody checking you and poking at you, make sure supervisor that you did it. When you don't have that and it's all on you to do that, make sure all this stuff done, make sure this stuff is paid, this, that, and that. It's a different degree of discipline you got to have to do that. And when you don't have that and you kind of let that go to the side, you can be here with your money and it be like that before you know it. And it happens all the time. So I just want you guys, if that's not you, you're not that type of person, just work on it. If you feel like you can't work on it, don't go down that road. Don't go down that road. I'm telling you. I love being an entrepreneur. I love being self-employed. But I will say this, there are things and ways about me that allow me to be that way, right? And that's lucky for me. But I'm understanding, like, I don't have PTO. I don't have paid sick leave. I don't have it. If I have systems set up with a lot of my businesses where, hey, I don't have to worry about certain things. But there are a lot of things that I do have to be very cautious of that I can't do. that if I had a job. We all hear all the time people say, I want to get off the plantation. But remember, there is some benefits of the plantation, so you got to make sure when you want to go down that road, you can have all that stuff in place, okay? Listen, man, I'll flap my gums for a while tonight. Let me see if anybody got any questions or anything. No questions, anything. Let's see. You see. See, we got anybody got any questions with anything? So we got that. I guess not. I appreciate you guys tuning in regards to this. I know something gonna pop up soon. We shut everything down. But again, guys, just to rehash everything. Don't buy a new home right now. Just kind of wait if you can, guys. I seriously want you guys to at least wait till the end of the year before you want to make any kind of 30-year commitment or anything. Because again, with those rates increases, values and prices are going to go down, and we don't want you to buy any underpriced, undervalued, overvalued product. I apologize. Any overvalued product that you turn around got locked into, and the price is lower, 6 months, a year later, and then you climbing uphill trying to, gain your equity back, gain your sanity back because you bought something overvalued. Okay, so just be kind of conscious about that. And if you have a game plan, we're doing it great. Looking to do an investment strategy with it. I understand. So we'll just be very, very mindful we're doing that. That's why I want to have that conversation with you guys tonight. Again, my main hub is Mr. Short Dollar. I know we're streaming live again, Facebook, YouTube, Instagram, TikTok, LinkedIn, and Twitter. The main hub is the Mr. Short Dollar YouTube channel. There are over 400 videos on the Mr. Short Dollar YouTube channel. We got a grants playlist with over 150 grand opportunity. We got an entrepreneur playlist. We got a finance playlist. We got a personal finance playlist. We got a business playlist. All that information you guys taking advantage of. Mr. Short Dollar been live for 6-7 years now. A lot of great information on the YouTube channel. Check that out. Also, if you're interested in getting started in the tax business, we got how to start your own tax business course on there as well. So listen, guys, make sure you get to the channel, the YouTube channel, Mr. Short Dollar. Subscribe to it. Hit the bell to get a notification each time we upload a new video. A lot of great info there. I appreciate you guys tuning in tonight. And if you missed anything come by your mind later on, just reach out to me. All the contact information is on the YouTube channel. Y'all be safe, guys. Love you, and I'll talk with you soon. Peace. See what we had coming out here. Peace. I guess we ain't got nobody else. Y'all take care.